I think the company is developing in line with our expectation. And, I always said from the beginning, ABB is a very strong company, good technology, good people. Should be no reason for not delivering good performance.
Yeah, I mean, but the problem with so many companies is you find yourself, and we had this with the CEO of Philips, in constant reorganisation of your assets, and one minute you're integrating, next minute you're giving more autonomy to as well. You've done quite a bit of that with your predecessors as well over at ABB. Are we at the finish of that reorganisation, or is there a lot more to go beyond?
I think we've been trying to simplify ABB in our structure. Where we're driving accountability and transparency and speed. That has been the three driving forces. And we actually put the organization in place already 2020. And the last 3 years, we've been operating according to this model. So I think it's a pretty steady organization at the moment.
Can I ask you about the operational EBITDA margin? I mean, this is higher than what it was. It's higher than expectations. Where do you see that going from here, and how have you been able to improve it to this extent so quickly?
Yeah, it's actually the highest first quarter in the company's history. I think this is, part. When I started, I said the ABB should be a company reporting over 15% margin. This is the technology. This is the type of company we should be. And a lot of efforts have been done by the different businesses, and we are now slowly coming up over this level where we should be. So strong focus going forward on growth and maintaining good financial performance. I think that is our objective. And I think this is where a company like ABB should be.
Can I ask you about the plans for the e-mobility and charging business? Because what we've seen at about 2.6 billion Swiss francs. Is it worth that, or is it worth more these days given the improvement in market conditions? And are you seeing a glimmer of hope around any potential IPO window, given that we are seeing a number of companies test the waters again now to come back with some listing plans?
Yeah, I mean, our strategy is clear. We want to do an IPO with this business, the minority part. But as you know, the market hasn't been very constructive during the last year. So we took a decision to do a number of private placement. And I think we have 6 very strong investors. And we took in over $500 million into the business. So I think we don't feel the urgency to do it. So we sit there. A lot of focus is making sure that the company is in good condition. And when the markets come back and we feel comfortable with them, then I think we will go to action.
More broadly, there's a huge focus this earnings season on inflation pressures, just what companies are seeing when it comes to those input costs and what they're able to price along the curve for some of their clients and customers. Just unwrap that for us. What are you seeing in the business right now?
Yeah, first, I think the cost increases have slowed down. So I think if we look at commodity prices, the logistic cost, and so all of them have been significantly lower. And there is not as much price pressure from suppliers as we've seen. And that is, of course, also reflecting in the way that we drive our business forward. Still, of course, last year was very different and a huge inflation. And of course, some of those price increases are rolling over to this year's. And that's what we also can see that affecting the good margin. But we do not expect to see so much price increases during this year. So it's softening up.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.